Welcome back to the show. We are having a conversation on the opportunities and risks present in frontier markets. And I am hosting Dan. Sorry, I'm baptizing you, am I not? Dan from SIB. I hate to be a Baptist. Okay, perhaps before we go into the conversation into the particular countries, what opportunities do you see present in some of these frontier markets? Which markets, which sectors, and any stocks that stand out for you in some of these outstanding frontier markets?
All right. So in frontier markets, there are three key themes. So we look at the positive demographics. So that means the population. The population growth rates are really high. Year on year, I would say upwards of, 5% year on year. So that would mostly mean that in the future, you would expect more purchasing activity, purchasing power within the country. Another key aspect that is common in the frontier markets is the low labor costs and the high, the abundance of natural resources. So those are the main themes when you look at the frontier markets. So the opportunities therein, when you look at the demographic aspect, so you can look at maybe the financial or the e-commerce sectors. So look at a country like Argentina has a company called Mercado Libre.
Yeah.
They are an e-commerce platform. They started really as an e-commerce platform, and then they just became bigger than So they offer a wider range of products right now. Look at Jumia from Nigeria.
Jumia is Nigerian?
Yeah, Jumia is a Nigerian
I've
company.
always used Jumia. It was Nigerian.
Yeah, it is a Nigerian company, though it was listed in the New York Stock Exchange.
Ah,
I think that happened in 2019, if I'm not wrong. When you look at the low labor costs, that is now you'll mostly focus on the manufacturing sector. So in manufacturing, you will expect that the bigger cost driver is labor. So if you can get cheaper labor, you will be able to take advantage of such. Look at a country like India and China. That's really how they leapfrogged into the emerging.
Because they leveraged on their high population and labor.
Natural resources, look at a country like Peru. Peru has one of the biggest copper mining companies in the world. It's called Southern Copper Company, if I'm not wrong. And look at Colombia, one of the big oil producers. Argentina, I believe it's the fourth largest lithium producer in the world. Come back home, that's Nigeria. We have oil there, member of OPEC. Kenya, tea, coffee. So you see, there's a lot of opportunity within such sectors. And also, it's key to note that the return potential in the frontier markets is much higher because since it's undeveloped or underdeveloped so far, when you get in before the crowd, you have the potential of riding the wave once the crowd joins in.
Yeah. That's quite interesting, and thank you for that analysis. But I'd also want us now to have a look at some of these countries. A country like Argentina, what makes it tick for you as an investor or as an analyst?
So Argentina is really blessed in terms of natural resources. So as I said, lithium is one of them. They also have a lot of...
Lithium is what we use to make batteries for this.
Yes, so you can see how they'll be able to benefit from the whole electrification or the going green movement. They are the 9th largest gold producer. They have a really big abundance of agricultural products. You can talk corn, you can talk wheat. That's really what makes it tick, to answer your question. I was going to go further, but
yes, carry on. In terms of, are there significant risks? Because I would wonder, guys who have gold and have lithium minerals and are strong agriculturally, like Argentina, should not even be in the frontier zone. I mean, they should have leapfrogged further ahead.
You could call it the curse of natural resources, because you would argue the same would have been the case for a country like Nigeria.
Absolutely. But at least they are the leading in Africa.
Though, to be fair, also Argentina is one of the countries that is in the waiting list, so to say, of joining the emerging economies, emerging countries. Okay. So at least, let's say their dreams are valid, more valid than ours are. Yeah. So, but the major risks that pertain to the frontier world, not really Argentina in particular, you will talk about the political risk. So, how politically stable is the country, election by election? How significant are election years to their market activity? Economic stability. So, do you have a country where the president does not respect the simple rules of finance or economics? Yeah. Do you look at a country
when
which
you say
has
simple rules of finance, you mean they print money?
It means when inflation is going up, you don't don't lower rates.
You have a nice way of putting it, but in simple terms, what you mean is they are not printing money at a whim like one Idi Amin try to do.
Yeah.
I hear you.
So also the integrity of the country. So when you look at corruption levels, when you look at the transparency, the accountability of the country, you would argue maybe that's why a country like China hasn't leapfrogged emerging into developed world. So a country like Nigeria maybe is also bogged down by the same issues of political instability and the rest. Yeah. Yeah.
Okay. In Africa, which one is the perhaps leading frontier market, and what's putting it there?
I would say definitely it's Nigeria. Well, for sure, since it was once an emerging economy, so it was just downgraded.
Yeah.
And the downgrade really wasn't because of the size of the economy, it was really the capital controls really. So Nigeria is a big economy really. When you look at the number of companies that are listed in the economy are 177 compared, and that's in 2020, so I don't know if there's more. Compared to Kenya's 66 in 2020.
We're doing well.
Okay.
Okay.
Not too bad, yeah. But you know, if you can compare it to the country which is in the emerging world, like Vietnam. Vietnam has 1,500 companies that are listed. You go to the developed world.
That small country has that number of businesses listed.
You see, yeah. So when you go to the developed world, you go to a country like the US, they have 4,000 companies that are listed. So you see, when you look at things in such a scale, then you start to see why a country is smaller than the other.
Or why one is termed frontier, the other emerging, and the other developed.
Yeah, because in frontier, the total, what do you call this? The total market capitalization of all the listed stocks is close to $50 billion. When you go to the emerging economies, it's $20 trillion. So that's a combined
of all the 20 or so emerging markets.
No, the 20 was a frontier.
How many emerging market countries are there?
I don't have the figure at the top of my head.
Because I remember your colleague telling me it's also around 20.
I think so.
Yeah.
I think so. I just don't have
that would mean then that 20 of them give you how many trillion?
20 trillion.
20 trillion US.
So you can only imagine.
Yeah, and then this other 20 give you 50 billion.
Yeah, yes.
I'm humbled.
It's good to dream big.
We have to.
Big enough.
Absolutely. As we said, our dreams are valid.
Very valid.
Let's talk about Kenya.
Yes.
And we are a frontier market.
Yes,
I know we have a good market. We have something going on. We have attracted a lot of attention from the international market. I would imagine we are the biggest market in the region. In what ways then can you say we need to up our game to get to the level of an emerging market?
So the main factor that drove most of these countries to jump from frontier into emerging economies is that how well established or how well structured their capital markets are. When you look at our country, Kenya, 95%, upwards of 95% of our financing activity comes from the commercial banks. 5% of the financing comes from capital markets, compared to the developed world, where upwards of 40% comes from the capital markets. So you see, when you have the rigidity that comes with financing from the commercial banks, they cannot really invest in the perceived risky sectors or segments.
And it makes sense, because they are trading with depositors' money.
Exactly, and also the regulator is on their neck on the same thing, which understandably it's people's money. Yeah. So when you look at the capital markets, there is the leeway, so to say, not really to joke around with people's money, but at least you can invest in what we can call the perceived riskier assets. So when we get a deeper capital market, and at least we can see there's positive strides from our regulator. There's a sandbox that the regulator has, that we can test out the perceived risky products. We can look at the activity on our on the medium-term notes that are being the corporate bonds that are being issued. Let's say like Kenya Mortgage Refinancing Company. They had their results, I think, on Monday, and they recorded an oversubscription of about 5 times. EABL had their MTN and 3 times oversubscribed. Family Bank had their MTN 1.5 times.
So there's money.
Yeah, so the money is there. It's just that we need to have more structures, more ability to be able to invest in products that would look risky, but if you do it in a structured way, the payoff will be worth it, and the risk will be minimized.
Yeah. When you go to some of these global markets with the products that you go with, or with the, some of the programs that you go with at SIB, do you favor equities, or, because you've mentioned bonds, or do you also find bonds in some of these countries attractive? And if both, then in what, if you're allowed to say, in what, in which weight, not percentage, but weight?
Weighting. So at Mansa X, we do not, we are really keen on being diversified, because we do understand that putting all your eggs in one basket is not a really good approach to doing things generally. So when you look at the allocation that we have, we do not really favor one side over the other on a permanent basis. The allocation is on a is on a dynamic basis, because on one side you could have things that the equities maybe could be looking less risky than the bonds at this time, or the returns are better. And then at another time, maybe the bonds are having a better a return to the investor. So
and it also depends on the country that you are going into.
Exactly. So and also you also need to balance that with the downside risk. So what are the inherent risks in investing in a particular country vis-a-vis investing in another country or another sector? So the key element here is really to have a diversified portfolio, and that's what we strive to offer to our investors at Mansa X.
Okay.
Yeah.
You've given me quite a good answer without telling me the weighting or percentages for that matter. I'll be humble enough and take it as it is.
It's dynamic.
Quite dynamic.
Yeah.
The final question perhaps that I can throw your way is, we've seen high inflation rates, 40-year highs as you had put it, and it is speculated that this will continue on at a global rate. The oil prices will continue to go up, and if Putin decides to do what he intends to do, because he's just playing Russian roulette with everybody, he may shoot any time, and it's a real bullet. But for now, it's blanks. Yeah. And I think if he does, then the inflation would really go high, because then that means that the oil coming from Russia might not hit the world the way it is now. Does this concern you at a global scale? Does it concern you that it might affect investments significantly?
Well, yes. Myself and, clearly all the other investors who are in the net selling position are concerned about the high inflation rates. The rates have been going up mostly because of supply side shocks. Unfortunately, that mostly cannot be dealt with through policy, because if you do increase interest rates, which is a perceived action that most of the central bankers are going to do in the coming quarters, that will not really cut down on the turnaround times at the port, or maybe not, it will not reduce the demand that people have for oil because they are trying to manufacture things. So inflation really is a concern, but since it's supply side, we do expect it to come down, at least due to historical analysis. You will say the shocks are generally absorbed. The private sector is more dynamic to change and to shift in that. So at least you can see even as I say, the supply side bottlenecks, the turnaround times at the ports, at least that is seen to be easing as of now. Not really eased, but at least you can say it's seen to be easing.
Would you still advise someone to still go global in terms of investment? Would you still recommend, just go ahead and invest, notwithstanding the challenges in the interim?
Well, of course. You see, the thing is, in as much as it looks like there's a crisis overall, there are pockets of opportunities. There are pockets of value.
Like you said, energy and banks.
Yeah, you see, in such sectors, agriculture, for example, will not be hit because of of high interest rates, But at least if you are to look at it in terms of a portfolio, you are keen to diversify. So if you are trying to diversify, you are definitely going to be looking for pockets of opportunity, to pockets of value within every different segment of the market. So you can look at the developed countries, the global countries, the global world. You see what opportunities can I get there, and then you can look at the frontier and see what opportunities of value are there. Because if the global side goes down, the frontier may not be going down, it may be going up, and that can act as a hedge to the other side.
Diversify your investment, and it will hedge on itself, as it were.
Yeah.
Thank you very much, Dan. Look forward to having you again in the show. Thank you very much, viewers, for joining us in this conversation today as we are talking about frontier markets and the opportunities that are available to you beyond the Kenyan borders. In Africa, we touched on Nigeria. In Latin America, we touched on Argentina. In Europe, we touched on Turkey. And of course, we came back home. So the Asians will have to wait until next year for a further conversation. But some of the things we've learned is that the real opportunities are present in the financial services sector and the oil sector, or the energy sector, as it were, because the prices are going up and the interest rates are also going up globally because of inflation. And for this reason, if you want to survive, you better take advantage of the pockets of the opportunities. I've been your host, Odhiambo Ramogi. This is Markets Today. Let's catch up again tomorrow at 4 p.m. as we talk about other forms of investment. I'll leave you with the currencies running on your screen for the day's trading of the currency. Goodbye and see you tomorrow.